My suspicion is that as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other.
Welcome to a world where the very foundations of currency are shifting beneath our feet. In this rapidly changing landscape, one question looms large. How can we safeguard the value and liquidity of our assets? Join us as we delve into the timeless allure of precious metals, gold, and silver in an ever-transforming financial realm. Explore their enduring appeal as a reliable store of value and a potential sanctuary amidst the uncertainties of our times. In this journey, we'll be guided by the insights of renowned expert Rick Rule as he unravels the enduring fascination with gold and silver in the ever-evolving tapestry of modern finance.
I think nationalization as commodity prices increase is a foregone conclusion. I would caution the questioner not to ignore stealth nationalization in the United States through taxes and regulation. Political risk is where you find it. And usually the political risk that's more familiar with you, that is to say the government that's closest to you, is the most pernicious. But in answer to the question, the answer to the increase in commodity prices in the 1970s was a whole wave of nationalizations around the world, including, of course, in Canada in the 1980s. And I think that past is prologue in this regard. I think in both Canada and the U.S. that the fear of an overt grab for private assets is probably overblown. I think even the Trudeau administration experienced fairly severe backlash for their idiotic overreach around the truckers' convoy. People often ask me when I was at Sprott whether I felt that nationalization of precious metals or nationalization of IRAs was a real threat. I've come to understand, I think, that there are easier and cheaper ways for the government to steal your wealth. One would be through the debasement of currency. The other would be through raising taxes and fees. An overt grab for your wealth through your IRA or through your gold might be met by some Americans with an armed response. If the government were to come for your IRA or to come for your gold through the front door, which is to say to nationalize it, there would be an extraordinary political response and an extraordinary threat. If they come through your wealth, if they come for your wealth by quantitative easing, by inflation, by increased tax, by increased regulation. So I think that the risk of backdoor confiscation is much greater than the risk of front door confiscation, although I wouldn't put anything past the big thinkers. I think for people who are not invested in uranium, that they need to get on it. For those who have been listening to our interviews for the last 3 years, Dunnigan, first of all, congratulate yourself. For you, that is to say, the people who are already participating, my suspicion is that it's time to begin to take more risk. I have, as you'll remember, been advocating purchases of the Sprott Physical Uranium Trust, Kazatomprom, and Cameco. It's time now to come down come down the quality chain, go up the risk chain, if you will. I mean, the popular commodity that everybody hates right now, and as you know, Dunnigan, I like hated commodities. The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised, experience difficulties with their existing lender. Once Battle Bank is up and chartered, I really look forward to competing for that business. Certainly, if we believe that gold and silver held in segregated accounts is great collateral, then we believe that providing selective flooring financing for precious metals dealers is a similarly good business. And we will be on that business like white on rice, Dunnigan. To depends on how you define the banking system. In the first instance, there's no federal deposit guarantee, which is to say that the government won't make good your losses if they occur in PSLV and PHYS. They are instruments that have no countervailing debt against them, which is to say, when you look at it as an entity, these trusts have no debt and therefore don't have the threat of leverage and don't have the threat of a bank run. They are very simple businesses. To the extent that we had a broad-ranging financial catastrophe, where, as an example, the New York Stock Exchange shut down, something which, by the way, I see very small probability of occurring, then certainly while your ownership in the trust would remain intact, your access to liquidity through the sale of the trust units would go away. I would urge your listeners to think about gold and silver as a form of liquidity. And I would urge your listeners, despite the negative real yields around holding U.S. dollar-denominated cash, to hold some, whether or not they hold it in the banking system. I'm a big fan of liquidity. I regard gold and silver as good, if volatile, liquidity. And I regard the Sprott physical gold and silver trusts as convenient, low-cost alternatives, as ways of maintaining gold and silver liquidity that don't involve physical possession and don't involve the transactional premiums that often are present in other forms of gold and silver ownership. I don't regard as one as necessarily a substitute for the other. I personally own both physical gold and silver, and I own the Sprott physical trusts. The physical precious metals take the form of cash. If you have a circumstance where, as an example, the government institutes a central bank digital currency, and if, as a consequence of the way you speak and feel, the way you present yourself on social media, they cancel your central bank digital currency, which they can, you would be very happy to have gold and silver, which you could exchange for other forms of value through barter. My suspicion is that as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other asset classes. Will this happen next week or next year? I don't know. But I'll tell you this. When I look at the proliferation of currencies, including cryptocurrencies, I'm increasingly attracted, and I was already attracted, to gold and silver as a partial store of value for my own estate. You're beginning to see fairly broad disparities in the cost of capital between the two, which is to say that Franco and Wheaton have very low costs of capital. Franco and Wheaton, and perhaps Triple Flag and Cisco, are suitable for investors. Speculators, by nature, come down the value chain. And what I think you're going to see is as the price to net asset value delta between the big royalty companies and the small royalty companies increases, one of two things happen. Either the share prices of the small ones will increase, or they'll be taken over by the big ones. Both of those are good. Probably the only thing that could be better than that is being right and seeing the share prices decline so that you could use the same work that you had already expended to buy more shares for less money. Both of those require a contrarian mindset. I'm sure that the listener was hoping to say a stock that goes up tenfold. But that's the realization of a success that you enjoyed when you bought it. So what really appeals to me is seeing a circumstance where a positive outcome is highly likely, where I have no competition. Another one would have been in the midst of COVID, when the oil price went briefly sub-zero, and ExxonMobil got delisted from the Dow 30. The delisting of Exxon from the Dow 30 was a one-off event. It caused all the index funds to have to sell it. And clearly, the price of oil sub-zero was a one-off event with the fully loaded cost to produce a barrel of oil, including cost of capital, above 60. Any oil price below 30 was a gift. I saw that. Now, I need to say that I missed the bottom of Exxon, hoping it would get cheaper, which is inexplicable. Sometimes stuff is cheap enough that, you just buy and then buy more if it falls lower. So I didn't catch the bottom, but believe me, I caught enough of it that it was an awful lot of fun. Those circumstances where there's a 90% plus probability you're right. And if you're right, where the rewards are more than attractive, where they're spectacular, that realization moment that you have in football parlance, you're the halfback, you have the ball, and there's a clear running field in front of you, no defender. That's as good as it gets. It's better than the touchdown. The anticipation of the touchdown is more fun than the touchdown.
As we draw the curtain on our exploration of the ever-evolving financial landscape and the enduring role of precious metals, we hope you found inspiration in Rick Rule's insights. Gold and silver, like timeless guardians of value, beckon in times of shifting tides and uncertain horizons. Your journey doesn't end here. Stay tuned for more thought-provoking discussions on the dynamic world of finance. Remember to engage with us by liking, sharing, and subscribing to stay updated on the latest wisdom. Until we meet again, may your investments remain as resilient as the precious metals we've explored today, and may your financial path be paved with prosperity.